All right, so in this lesson, I'm going to show you 5 steps to catch an early bullish trend reversal. So this is an altcoin market. It's called Made. And I generally like to buy altcoin markets on spot. So my goal is to buy low and sell high. I'll short and margin trade altcoins, but predominantly just for shorting when the markets go parabolic if I don't happen to own any. But as far as margin long is concerned, I stay away from that just because they're not very liquid. So to minimize my downside risk, I just prefer to buy in the spot markets. And so I look for early reversal signs when doing that. So let me show you the 5 steps that I look for. So step number 1 is a capitulation candle, right? So as you can see here, this market was selling off in a bear channel, right? So we have this bear channel right here. And you have a capitulation candle. This is where people who bought high give up, they let go, they just dump, they've had enough pain, they want out of the market. Oftentimes that can signal the bottom when that happens. It doesn't always have to, but there are a couple of signs with capitulation candles is there's deep red on volume. It usually happens lower in the bear trend. So up here you had some volume and deep red, but this was just like an initial correction, right? Just like up here. This is because the markets were exaggerated to the upside, right? But so it's kind of selling off. And as it approached the bottom, we had a lot of volume. You can see the volume candle right here. People just let go. And more volume here than at any other point, right? And you see this long wick, right? So it gets snapped up quickly due to, the order books, buyers stepping in, right? So buyers stepped in, big capitulation candle. We bounced back into this bear channel. So that's step 1. Step 2 is a retest of support holding up. So in this case, you can see this Adam and Eve double bottom. The reason why it's called an Adam and Eve double bottom is because you have a sharp candle, that's the Adam candle, and then you have a rounded candle or a series of rounded candles, which is the Eve part, right? We also had prior support over here, so technically there's like a bit of a triple bottom happening here, right? So we see multiple points of support here. So that's step 2. Step 3, and now you start to have confirmation on step 3, is a breakout of this bear channel, oftentimes with a lot of green, showing the front side of a new trend, right? Just how I said, look at the predominance of color. See how all the major candles, the biggest candles are red, 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 and then all of a sudden, boom, you have predominance of green right here, massive green candle, right? So step 1, step 2, step 3. Step 4 is a higher low, right? So definition of a bull trend, series of higher lows. Definition of a bear trend, series of lower highs, right? So that's step 4. And then step 5 is if you cut out this wick here, oftentimes what you'll see is an inverse head and shoulders, right? And this doesn't have to look pretty or perfect. It's not about the charts looking super fancy. It's just about the general concept, right? So the reason why an inverse head and shoulders works is because it generally shows the first high or low. And so the last step in confirmation, full confirmation, is the breakout of this neckline here on the head and shoulders, right? So you could have multiple entries on this if you wanted to. I only had one entry, so I did buy this dip right here at around 10.05, and the price went up quite nicely. So this has been trending market, right? It's gone up 100% since my entry point. So let me show you another example with Ethereum. So I only took one trade on that because it wasn't a very liquid market, right? But let me show you how I traded Ethereum, which showed very similar patterns and it was a liquid market. All right, so here you have a bear channel. Very similar to what we saw with MadeSafe, except tighter range, a little more liquid, right? So step one, I'm just going to move this over here. Step one is that capitulation candle. So if I zoom in here, you can see this long wick, and look at the volume. Again, capitulation candle. Look at this volume. The most volume we've seen since over here, and this is at the bottom of the trend. So, the price up here was like $22, and the price here went down to like $7 or something like that, right? So what I did is I caught the bounce play and I sold for a 22% trade. So I'd sent out a trade alert on that. We had a nice bounce play, and I sold before this rolled over, right? But we were still in this channel, so that's why I sold, right? So that was step one. But then step two, you have a rounded double bottom, Adam and Eve double bottom. Now it doesn't have to be an Adam and Eve double bottom. It could be any type of double bottom, and you don't even have to give it any fancy names, really. I mean, you could call it whatever you want. It's the general principle that counts. It's the principle that support held up, right? And check this out. You look at here, there was a major point of resistance over here at this area, right? And that turned into support. So prior resistance turned support. We also had some support here. So technically there's like a bit of a triple bottom there, right? So that's step two. Step three was the breakout of the bear channel, right? So I actually added on this breakout. So I scaled in on my first swing trade entry on this breakout right here at 95, right? So I didn't quite nail the first entry here, but I was a little bit late, but I still got a good entry. So that was my first entry right there, right? So step three right there. Step four in this case is we made a higher low, and I added on this dip, right? So I added to my position. So this is called scaling in, right? Multiple entries. So I scaled in there. And then what ended up happening was you do still kind of have this inverse head and shoulders type pattern. It's a little bit lopsided, but what was even more important to me than that is we had this other descending trend line, and as we were breaking out, I added to this position before we broke out. So as volume was coming in and ramping up. Now we're in the process of retracing right now. We'll see where this market goes, but it's showing all the early signs of a reversal, right? So there's three entries that I had position sizing, and this is just on the spot market, right? So there wasn't any margin, so I don't have to run tight stops necessarily on this. I can be patient. A couple of other things could happen. Obviously, could go in that sideways accumulation, but so these are various different steps as well for Ethereum. Now, if I were to look at a fib retracement, and just measure this entire trend, we can see that the price where support was creeped down below 78% retracement, right? So it retraced a lot, not quite 100, but a lot. So, eventually the market's going to hit a reversal as long as it's alive, and this market still has a lot of liquidity. In the past few days, it's been trading over 30 million in trading volume. So it's very much a live market. And if you can also match up fundamentals, if there's a lot happening in this current ecosystem of a certain market, then that can help as well. You don't need the fundamentals to trade this, but if you can have multiple reasons to take a trade, it can basically just give more confidence in your position sizing and being able to take a trade, right? Obviously, like if you have multiple technical reasons on the charts, like I'll show you another technical reason here. So I'm going to insert an indicator. Actually, yes, and I actually want to show divergence here because technically divergence would be step number one because that happens before anything else. So look at this. As it was selling off, right, we were starting to get divergence. As in, we started to get just slightly, as you can see here, higher lows. Right? So even though the price is all the way up here and going lower, we started to see divergence on the momentum, right? Showing that it was oversold already here and that, bearish momentum was waning already. So technically this divergence is step one, but you don't want to just trade off of divergence alone because you'll jump the gun too soon. Like if you just trade it off of divergence alone, then you might not have full confirmation, and sometimes you get false signals. So you need multiple reasons to enter into a trade, right? And so this is why and this is called pyramid trading, right? So pyramid trading is just scaling in as you have more confirmation of the trend moving in your favor and position sizing. And you could also do cost averaging. If you wanted to, let's say I bought here and it went down further, I could cost average down if I was on spot markets and then eventually hits a reversal and I could end up being in a profitable position. So you can position size and scale in both directions. For me, position sizing is definitely one of the best ways of managing risk. And it's certainly a hedge. You get to hedge your position because if it works against you and it goes against you, then you could cut out at a minimal loss, or you can add to your position with a cost average and then just sell on the bounce and get a better fill and manage risk that way. So there's basically multiple reasons for me taking this trade because it's showing all the early signs of a reversal. Of course, nothing is ever truly guaranteed, so anything could still happen. It could still flop, and you have to manage risk accordingly. But if you have certain rules and a certain checklist to go by, then it's good to pull the trigger and just find those higher probability trades. So that's it for this lesson, and I'll see you in the next. Cheers.